Mr. Sudhir Singh, thank you very much for taking the time out and speaking to us here on ET Now. We are here at Coforge's massive campus. You had the Investor Day presentation happen here. But let's talk about the numbers, because that's what is making news when it comes to your company. You have completely exceeded market expectations when it comes to your earnings. This has been the trajectory for the past 1 year. I want to first ask you about EBIT margins. Now, if we look at the numbers and peruse through them, your EBIT margins, Q4 came in at 16.6%. It was held by forex gains and, of course, third-party costs. Now, excluding these benefits, what do you think are going to be the core sustainable drivers for the business?
I think on the EBIT side, we talked about this during the investor call. One should expect the 16.5% standalone margin level to stand. Okay. And we were very, very clear that starting this quarter, the quarter we are in, which is Q1, the market should expect, and we expect of us, to hit a 16.5% to 17% reported EBIT standalone threshold. So we feel confident about where we are. We feel confident about what we've already done over the last 5 to 6 quarters in terms of not just talking about AI injection, agentic AI, but infusing that across the internal operations of the organization. 16.5% to 17% standalone reported EBIT guidance for FY27 stands.
Right. So when we talk about the numbers, Mr. Singh, and particularly look at the spreadsheet of numbers, BFSI as a category stands out, and that is because of the fact that revenues have remained flattish. Why do you think that is the case? Is this due to the fact that perhaps there is intense competition in the space or something else?
No, BFS for us has grown. The firm, of course, as you said at the outset, has grown 29.2% through the year. Banking this year, the year that we're already in, fiscal year 27, is likely to do extremely well. We talked about it yesterday. We talked about what differentiates us. We talked about the hyper-specialization that we have in this space. For the last 5 years, banking as a business for us has grown almost at 35%. Last year, it was significantly lower than 35%, but we do expect it to rebound. And not just banking, we expect all the industry verticals that we have to do well on an ongoing basis.
Okay, when we talk about growth now, your Q4 growth sort of slowed if we look at, sequentially, that growth. But your Q1 FY27, that is expected to be flat, but you have also given a very positive commentary when it comes to the second half of the year. What do you think is going to aid that? Especially when it comes to the kind of challenges that the IT industry and sector overall is facing.
See, we have a contrarian narrative when it comes to our analysis of what AI represents for the industry. We don't see it as deflationary at all. And that narrative is borne by our performance, which over the last 3 years since the advent of AI, again, has been contrarian. Our growth has accelerated while there is the whole doom and gloom scenario that's been playing out. From our vantage, last year was 29% plus growth. Our forecast for the current year, not just for the second half, starting Q2 onwards, is robust growth. Last year when we started, we said we will deliver robust growth, and what we delivered was 29.2% growth. This year at the start of the year, I again said, and this is something we maintain, FY27 will see Coforge clock in robust growth once again. Q1 is going to be flat only because we are killing a significant part of the India business, which is lower margin. Despite killing that business in Q1, we will recoup everything that we lose through the very strong organic momentum that is in the other businesses right now. And we could have taken a call like that, killing a business in a market and a macro that is depressed only because of the confidence that we have in our pipeline. So it's not just the second half that's going to be strong. Q2 onwards is going to be strong. Nothing has effectively slowed down from our vantage. We will continue to do what we've done over the last 12 quarters after Q1 is over.
Okay, so when you talk about the strong growth trajectory that you're talking about, Can you give us some figures? Because you've been also in the news for your future projections for the company for the year 2030. What do you think is going to drive that? And so when you spoke about AI, now AI is central to all client conversations. It's also central to geopolitics, if I may say that. A lot of policy moves that are also happening. But how are you really looking at AI in terms of the contribution that it's going to make to your overall growth?
Sure. Let's start with the 2030 part that you talked about first. All I said yesterday was if we continue to grow at the same organic rate as we have for the last 9 years, and if we were to do just one $500 million acquisition over the next 4 years, we will hit $5 billion. You also heard me say yesterday that $5 billion isn't the ceiling to our aspiration. There's nothing that stops us from further accelerating the growth curve that we've been on over the last 9 years. If you look at our last 9-year curve, it's not a linear curve. It's an accelerating curve. The guidance what we put out there for 2030 was, from our vantage, a conservative view, saying, hey, listen, if all we do is the average of the last 9 years and one acquisition, we land at 5 billion. If all goes well, and that's going to be the intent, we'll try to do more than that. As far as the AI piece is concerned, which was the second part of your question, there is this broader narrative that has been floating around, driven by the LLM providers, by the foundational model players, which is about how they see AI as a growth driver for them. You again have, understandably, some of the platform players on the data side. Recently, Databricks, Snowflake talk about how their TAM is expanding. From the IT service provider perspective, again, and this is not something that is talked about, the existing service lines are seeing clearly new demand pools that are emerging.
Right.
There are newer standalone demand pools that are emerging outside what we had on the existing side. Any service provider like Coforge, which is able to address, we talked about 6 demand pools yesterday. If you address all 6 of them, maybe you end up in a scenario where AI, forget being a headwind, ends up being a material tailwind to the growth numbers.
Right.
That's how we see it.
So, Mr. Singh, when you talk about AI being a material tailwind, but let me also ask you about the hiring question, because that's also been making news.
Sure.
We have seen companies sort of lay off people on the back of IT. This has been largely prevalent in big tech companies. But how are you looking at that? Because many are also sort of, cheering for a diamond sort of structured model when it comes to hiring. So how is that going to change your hiring outlook?
If I were to reflect on last year, and I think last year is the best objective measure to look at, our headcount went up 8% through the year. Our revenue went up 29%. We continue to hire as we speak. I mean, this campus that we're standing in right now, there might be classes going on with a bunch of freshers who've come in and have joined us. But at the same time, we're also hypersensitive to the fact that in order to deliver the margin guidance that we provided, and I suspect we're one of the very few firms that have said, very robust growth going forward with a very material expansion in margins, we will dehyphenate the resource addition or the employee addition with our revenue headcount. We do not want it to be linear as it has been in the past. Last year was a great example, 29% growth with only an 8% increase in headcount. Our headcount will increase, and that's largely because of the robust growth that lies ahead of us starting now, but it will not be on the same growth path as the revenue numbers are going to be.
Okay, so there's going to be sort of some correction.
Employee growth will be less than revenue growth. Given the fact that we do see very strong revenue growth, employee numbers will continue to grow, just not as high as we think our revenue, at the same speed as the revenue.
All right. So let's also talk about some numbers with respect to your earnings. You signed 21 large deals, Mr. Singh, in FY26, including the $150 million UK public sector deal. But how much of these wins are expected to contribute to revenues in FY27? You did mention about how AI is going to be an opportunity and a contributor to your overall revenues. But what about deal wins? Aren't you faced by the headwinds that we're seeing, the policy disruptions that we're seeing in the United States, which is where a majority part of your market is?
Those 21 large deals, almost all of them were AI infused. So we don't see large deals as something that's a different stream that's flowing through. All of them have been there. The headwinds, you're right, geopolitical headwinds, some of the policy-related headwinds, some of what is AI-induced headwind, right, especially on large managed services contracts, are all real. But when you run a business, at the end of the day, you try to just almost tabulate all the headwinds. You try to figure out where the tailwinds are. As long as the tailwinds are far stronger than the headwinds, you have that natural buoyancy that we expect to continue. Okay.
Talking about the Encora deal, numbers essentially suggest that you've guided for 20 to 25% of G&A synergies from the Encora integration. What's the timeline for realizing these benefits? And Mr. Singh, the second part to my question is, will you be looking at more such investments to sort of, grow your revenue pie?
Sure. The number that we've already realized, we started by guiding to 20 to 25%. The number that we've already realized is 25 to 30%. It's done. It's not in the future. It's not something we're targeting. The acquisition has been consummated. the G&A synergies have been delivered internally, and that's why there was a lot of confidence around the guidance that we gave out. What was the second question that you had?
The second question was, are you looking at similar investments in AI startups with respect
Not necessarily
to the
in AI startups, but one of our superpowers over the last decade has been our ability to take a very contrarian approach to the assets that we target and a very contrarian approach to how we integrate them. And that's why our record around integration and creating value from asset acquisition for the last decade has been 100%. We will continue to look at acquisitions as a growth lever for Coforge because we believe that in some ways we look at ourselves as the turnaround team, the team that knows how to select the asset that no one's looking at, and then the team that's always, invariably, never failing on that count, delivered for the last 10 years.
Okay. Mr. Singh, I have to ask you about your guidance for free cash flow to PAT conversion of 100% in FY27. How do you plan to sort of deploy that cash? If you could give us some color, some visibility on that.
So we're going to use it across 4 different axes. One, of course, is, and you know this, as part of the Incora transaction, we took a loan of $550 million. That loan starts becoming due from Q3 onwards. It's a 3-year fixed 10-year loan. So part of it is going to go into that. The second piece is going to be hopefully dry gunpowder that's going to be available to us to continue to look at acquisitions that we just talked about. The third is money that we plan to use for expansion on the client side. So we will look at that amount of capital being allocated towards building potentially not just hyperscaler, but even LLM partnerships on an ongoing basis, looking at carve-outs, looking at buyouts of existing businesses of clients. And finally, of course, as you know, there's a small piece that goes into dividend payout as well. So it's a 4-pronged capital allocation approach that we have.
Right. Would you be able to give us some visibility when you talk about AI acquisitions or AI partnerships that you're looking to forge in the next quarter? How many of these are coming up?
Oh, as you can imagine, Coforge, like everyone else, is very actively soliciting especially the foundation, the LLM players for partnerships. We do hope to be able to consummate at least one in the coming quarters. It's difficult to say if we'll be able to close it in the quarter that's coming up. As far as acquisitions are concerned, given how strong the organic growth momentum is, we're not stressed. We're not stressing over it. We will continue to look at assets. If we have assets that we think are coming in at the right valuation, once where we think we'll be able to turn them around double quick, we'll go for it.
Okay. Just one final question, Mr. Singh, and this is essentially about developments with respect to the United States and the export curbs they have put on 2 of Anthropic's models, Fable 5 and Mythos 5. As it is, AI has created quite a disruption, whether you talk about the stock markets in the United States, and because of that, the impact that many are talking about in the Indian IT space. How are you looking at those export curbs? Because many are saying that India needs to develop its own sovereign AI model.
It's in some ways, I guess in your parlance, still breaking news. This is almost fresh off the press. At this point in time, I don't think there's any gainsaying the fact that every nation, given the entire conversation around sovereign AI, should, and I know that India is looking at creating its own LLMs as well on an ongoing basis. We look forward to it. We look forward to working with a clutch of LLM providers over a period of time. But at the same time, I think the implied question was, do we see ourselves getting into that space? And the answer there is no. We see ourselves as business solution creators. We will work with the LLM players. We will work with the tool creators. We will continue to focus on domain hyper-specialization and create solutions that are embedded with technology. We will, as and when India, and we hope India does, come up with LLMs in that space, we'll continue to partner with them.
Okay, so you will continue to partner with LLMs, and you say that, this should not something that India should perhaps be looking at. This is
No, I'm not saying that. I'm saying India should, of course, should look at it. Right now, if you look at most of the LLM providers, they're centered largely around 2 countries. Europe also is still on the fringes.
Yes,
it's the US and it's China. India should by all means do it. We will be standing there rooting for it, looking for partnerships with whoever builds it, but we don't see ourselves as a tech services provider building LLMs right now.
Absolutely, because when you talk about being a tech services provider, our services exports have sort of outperformed if you look at the data of the past couple of quarters. But Mr. Singh, the government also feels that we should be an application developer, and that's how we should sort of, build cases for social and public good. But many say that it is very, very critical and very important to have your own strong AI model, because what really happens when governments across the world, they become unilateral in the decision making and sort sort of impose curbs, then you are left at the mercy of those governments.
We think, and we are an India-listed firm, we do subscribe to the theory that India should have its own LLMs. We also subscribe to what you talked about, right? Creating apps. From our vantage, it's really creating applications or platforms or products that will provide business solutions. That's our forte. That's the area that we will continue to double down on. And we'll look at how the LLM space evolves.
Absolutely, Mr. Singh. This is a very interesting space that we will be very closely watching and look forward to speaking with you super soon again on some of these aspects. Thank you, sir.
Thank you. It's been a pleasure.